Hi everyone. So let's just quickly have a review of the opportunity that presented itself. But before I do that, it's really important to understand something that's so foundational that I think folks just take it for granted. So there's a couple of things, and the first thing is, which I'm surprised most, there's a couple of things that really need to be understood. Number one of the key things when you see professionals and amateurs trading, what is their focus? So the focus of most professionals, and irrespective of style and method, okay, versus, I guess, retail, their focus is on levels, whereas retail focus is on signals. All right, so this is one of the problems. And you could also say signals or what behavior, stuff like that, like signals and behavior, or patterns, behavioral patterns, whatever you want to call it. But professionals focus on price levels. You'll see that this is what they focus on. However they do what they do, this is like their focus is this level, that level. All right, where you see a lot of the retail traders, and even anyone who's a beginner, that's what I really should be saying, beginner, they will almost all of the time focus on signal behavioral patterns of an indicator, of indicators. So they'll say, okay, the MACD crossed, or the stochastic, or the RSI is diverging, or this or that, or they say a candle is incorrect way of trading. And this is one of the first things you'll see. So I just wanted to focus on the importance of this, and that whatever methodology you have, it needs to start with this. Like the focus needs to be here instead of finding, confluence between this, that, and this signal, that signal. Because obviously, if you have price that's, for example, price that's going down, right? Oh shit. Anytime you have a little rally, all of the indicators will show bullish. That's what happens. And that's how you get trapped. So, all right, so understanding the professionals focus on levels, and we should also be focusing on levels. And then take a look at the behavior around those levels. Even if you see, if you're a Wyckoff style trader and you see what Weiss and people who actually traded that uses Wyckoff method, the chapter began really with levels. The chapter is where to find trades, and he would focus on levels first. Where to find trades would be support and resistance levels, or test of the breakout and test of breakdown levels first and foremost. Because why is that the case? Because signals and behavior outside of these levels of support and resistance, they are random, meaning signals, the level itself serves as a filter on filtering out a lot of the randomness, because what's within the range is too much randomness. There's just too much randomness, and that's what you're going to get trapped in. So you can see even in David Weiss's book, stuff starts off with where to find trades, which is another way of saying how to find the level to trade at. Right, so that's one thing. Second is, like, what really is day trading? If you ask this question and you cannot answer this question, there's a problem. If I say to you, what is day trading? And you cannot answer that question, or it's something like trading for a short amount of time, although that's part of it, it's not really that. It's much more than that. Day trading, part of the thing is, it's really trading around support and resistance. That's what you're doing. When you look at day trading, what it is you're trading the reactions. It could be minor or intraday, however you want to call it. I don't know what to call it. Intraday reactions around higher time frame support and resistance. So what do we know? Because the whole point of it is that we see all the time that when price reaches a level, it tends to react. And even if it doesn't work, this reaction here is enough to make money. This little reaction is on an intraday is equal to an entire trend. Like on a 5-minute chart, this 3-hour, let's call it a 3-hour or multi-hour chart, this little thing is a right? This here is an entire trend, this little reaction off of this level. So when you're day trading, you're trading intraday reactions around high time frame support and resistance levels. That's it. That is it. All right. It's not a focus on all types of other crazy definitions, but this is it. So anyway, so now I'll show you the trade. So you find the level of support and resistance levels, and the market goes there, and on a lower time frame it starts reacting. You get in, and you have your stop, and you have a target. Done. All right. So I want to harp on this because I think folks have lost foresight or an understanding of what's going on, and the focus is on some, I don't know what. There's so many different methodologies and so much noise and so much new stuff. They start making you think about quote unquote liquidity and this and that and this and that. Yeah, it's important, but I mean, the basics is more important. Anyway, so where was the trade? The trade here was right here. So you had this support resistance level right here, right? So this is the minor support resistance support level. Market broke out. You can use any type of chart you want for your support resistance. I would say that there's one chart which is totally underutilized, is the point and figure tape reading chart. It is totally underutilized, and it is one of the best charts you can use for support and resistance. I know folks use it for cause and effect and counting this and that, but they're just missing I think more important is its ability to identify in an easy way support and resistance levels on a point and figure 10 times easier than on a bar chart. It's just because it doesn't have the element of time and minor fluctuations, so you can just very clearly see the support and resistance levels. It's just become very obvious. So on a minor scale, right, we see that on a 9-box, you had this rally here. I should call it a rally, not just buys. It's a rally. It means buy the pullback. So it broke out. You had volume 24 times 10,000 and then 23 times 10,000. Obviously clear breakout. So I'm looking for a pullback. So the market pulls back, and when it pulls back exactly where I wanted to pull back into this area. You see the white and red lines? That was the area I was looking into. It just tapped it and it immediately reversed on 77,000 contracts. When it did that with this big green bar, I knew that it's going to go up, right? So after it did that, it pulled back and it tested. I missed this entry by like, it's just, I don't know. I just couldn't get in over here. Then it went up. So the next entry is across this demand area. So then it just gives you 1, 2, 3. It gave the entry like best entry, so it'll give you the entry. But you just have to be smart about your stops. And the reason why you have to be smart about your stops is because they did a shakeout. This wick right here is the shakeout. I don't know if you guys can see this, but this was the shakeout. Right? So what was going on was they know that the buyers are here. They went long either here or there, and then it made a high above this green bar right here. It made the high. So once it made the high, the stops are going to be moved to break even. So what do you think happens when the stops are going to be moved to break even? The shakeout hit the break even spot, which was the high of the demand area. So this is the manipulation that if you were long, you'd go to break even after this higher high bar, this green bar that makes a higher high above the prior highs. So you move to break even, and this is the shakeout to get you out at break even and then resume markup. So this was the game that was done today, and that's it. So sometimes you just can't do anything about it. You just have to take the next trade. This is what happens. The best entry was right here, but unfortunately I was unable to execute this one. I got in here, but got taken out here, and then the market just went up. So that's what happens. Next trade. So the next trade I'm looking at is it's gonna happen after this thing breaks. The support level will be on 41.85. So 41.85 will be a pullback to this area. We'll see how it responds there. Responds good, re-entry. Yeah, but at the same time, like, not stupid, right? The daily trend is down. So, these are counter trend intraday trades. Where the pressure is going to be is right in this area, right up here. It's like this is where the minor distribution was, right here. The distribution is, there's the line. 4265-ish, around that 4260, 4265. There was heavy distribution there that caused the last daily rally breakdown. So like if it comes to near this area, all bets are off. All bets are off. Like back to selling. Back to selling, or at least just not buying. And this is not something that I'm like figuring out. This is based on the data. The data's giving me this. I'm not just drawing line up here, down there, right? So this is what the volume is saying. This is what anyway, so that was the opportunity. So what I started out by saying was, what is day trading? Day trading is trading higher time frame, support resistance levels using lower time frame entries and getting those minor moves, which intraday could be a trend. This is that reaction. This is that trend. This is that reaction from the support level. The support level is between this white and red box, white and red lines, goes to support, bang, buying comes in. That's the definition of day trading, meaning reaction, support, and resistance levels. And in this case, buying at support. How do you know? You have all this shit in the background with 1, 2, 3, 4, 5. This is accumulating here. Taps in, boom, ease of movement. 77,000, pulls back to test, holds the demand level, goes up, pull back where, holds the demand level, and continues. So that's all, folks. The other thing I do want to mention is, again, I keep warning people about this diversion over here between the S&P as well versus the NICE and the NASDAQ. I don't, until this low is broken, this level looks very shady. This not level, but this move down on the ES, because there's no market breadth. It's not supported by the New York Stock Exchange as well as the NASDAQ. And I'm not just talking about like few stocks. These are thousands of stocks. They're not making new lows. So that's a fact. That's data. That's that's no interpretation. Anyway, thank you. Have a good day. Bye.